He showed little sympathy for a company he described as, quote, our major and most aggressive competitor. As far as AIG are concerned, I shed no tears for them, Charmit said. I have been in the business for 37 years, and I believe that any normalization of AIG will be beneficial to the marketplace. It will release huge volumes of business throughout insurance portfolios. I don't want to jump in their grave, but I think this is a very important event and positive for the marketplace. We believe, Charmit said, a hard market in 2009 is a near certainty. He said that the outlook for the reinsurance market was as positive as he had seen in a number of years. You can say many things you want about Sean Charmit, but he's very rarely wrong about things that he knows about, and nobody doubts that he knows about insurance and reinsurance. Some other numbers coming out of Hamilton. Renaissance Re recorded an operating loss of $143 million for the third quarter of 2008. This compared to net income of $167 million for the same period last year. It's due to a $276 million negative impact from Gustav and Ike, as well as $93 million in negative investment results. Neil Curry, RenRe's CEO, said that the combination of the U.S. hurricanes and turmoil in the financial markets resulted in a decrease in our tangible book value per share this quarter. He went on to say, as we look ahead to 2009 and the upcoming 1/1 renewal, our strong ratings, our balance sheet, and experienced underwriting team position us well to capture opportunities. Also from Schaumburg, Illinois, Zurich Financial Services said that based on preliminary estimates, it expects aggregate claims payments related to Ike and Gustav to be about $600 million U.S. before tax. This figure is net of reinsurance recoverables and includes reinsurance reinstatement premiums. Zurich added the estimate includes about $55 million for Gustav and $545 million for Ike. These charges will be recorded in the 9 months results 2008, which are due to be released on the 13th of November. Here's a little story that we noticed, and then it wasn't until we got to the end of it that we thought to include it here. Moody's, which is the world's second largest credit rating company, posted a 17% drop in third quarter profit. It also cut its 2008 forecast. This isn't too surprising as the credit market seizure sapped demand for new bond ratings. Moody's net income fell to $113 million from $136 million for the quarter a year earlier. The biggest financial crisis since the Great Depression worsened materially in mid-September, according to Moody's CEO Raymond McDaniel. He said that slump has all but shut down the corporate and asset-backed bond markets, curbing demand for debt ratings from Moody's and S&P. S&P parent McGraw-Hill yesterday said its financial services unit had experienced a 14% drop in revenue as the dollar volume of U.S. bond issuance tumbled 62% in the third quarter. One analyst said that the credit crisis was much worse than anyone thought. For a couple of months, we basically had zero issuance. Profit from structured finance, which includes collateralized debt obligations and securities backed by loans, dropped 50% globally and 65% in the U.S. during the quarter, according to Moody's. Moody's, whose largest shareholder is, guess who? Warren Buffett's Berkshire Hathaway company, is down about 42% this year and closed yesterday at $20.61 in the New York Stock Exchange. Overall, it's not too bad. There was a 36% drop in the S&P 500 index in 2008, and they're down 42%. Isn't it interesting that Mr. Buffett owns some stock in a ratings company? Again, he doesn't miss any bet. If you have all the bets covered at the table, it's tough to lose. Stock market is up about 15 points. If we have any other breaking news, we'll come back and tell you. We will not interrupt the systems if the announcement comes as expected. So we will see you tomorrow at the regular time. Thank you for watching.